Welcome to Nicole Haig and Associates' first webinar. Thank you for joining us. I'm Amy. I will be your moderator for today. We're going to get some, sorry, we'll start with some house cleaning, which is welcome to the Zoom. If you haven't done Zoom before, please check your audio settings so you can hear us and test your speakers. If you have any issues, you can ask some questions down in the chat box and I'll get back to you in the background. Also, if you have any questions throughout the webinar, please ask in the Q&A button and Nicole will answer them at the end of the webinar. Also, if you need to leave the webinar during the next hour, please feel free to do so and join again. Also, this webinar will be recorded and can be sent out to you next week. Next, I'm going to introduce you to Nicole Haig, who is our panelist for today. Nicole is the CEO and founder of Nicole Haig and Associates and has over 25 years experience in chartered accounting, including 16 years as a partner in accounting firms. She has strong knowledge base in the property development and construction sector. And over the past decade, Nicole has designed a business development program that provides genuine value to clients. Please welcome Nicole Haig.
Thank you, Amy, and thank you everyone for making the time to be here today. Firstly, I'd like to kick things off with some wise words from Thomas Jefferson. So if you want something you never had, you must be willing to do something you've never done. These words were written about 230 years ago and are as true today as they were back then. So this session today is about challenging you to do something different in your business so you can get results that you've never achieved. I'll briefly run you through the agenda for today. I would encourage you to take notes. So we've got a workbook that Amy has put in the chat panel if you haven't downloaded it already. So if not, download that and write notes beside the slides. So I'll briefly just go over what we're going to talk about and then we'll go into it in a little bit more detail. So we're going to have a look at choosing to change. We'll then have a look at your roadmap, getting you from A to B. We'll then look at your dashboard and the 7 ways to grow your business. We'll then go through a worked example and then talk about your next steps. And then we'll discuss any Q&A questions that you might have at the end. So remember, put any questions that you have along the way into the Q&A panel below. So one of the biggest problems in a small business is FTI, that's failure to implement. So if you don't write your actions down, you won't remember them. So just as if you don't write down your business goals for the next year, you'll be far less likely to achieve them. So today we want you to get maximum value from this webinar. So if you've got any questions, once again, put it in the Q&A and we'll answer them at the end. We'll cover how you need to make the choice to change and how to develop a roadmap and a dashboard for your business. So we'll then get into the 7 ways to grow your business. I'll go through the worked example like I talked about before, which will demonstrate how you can make seemingly small adjustments to your business, but the compound effect on the bottom line and the cash flow can be very significant. Then it's accountability time where you have to decide what action you're going to take as a result of coming along today. And if you have any questions during the webinar, once again, put them in the Q&A. So let's talk about choosing to change, because so many people don't like change. They like the status quo. And we've been through a lot lately in the last few years. And I think with business, there's always going to be change and we need to be dynamic and be able to amend our business as the environment changes. So change just doesn't happen on its own. You can't do nothing and expect things to remain the same or even better. You have to make a choice to change. You're in control of how you respond to the events that happen in your business. You know, we've had natural disasters, we've had COVID, we've now got global inflationary pressure. And there are generally 5 steps to change that you need to be aware of. So the first one is awareness. You just need to be aware that you need to change. So it's unlikely your business has been able to continue as normal, and changes do need to be made. The next step is acceptance. You need to accept that you need to change. And it may not be easy, and we don't like change because it disrupts things, but the alternative of not changing won't be easy either. So once again, you need to be dynamic in business, and we need to move with the ebbs and flows. Now you've accepted changes needed, the next thing you need to do is take some action. So the question is, what steps do you need to take to enable the action? And this is where most people do get stuck. So they may not respond to immediate actions while in crisis mode, but they fail to take the action required. To make sure you take action, accountability is required. So being accountable by someone independent really does make things happen. So you don't have to do this alone, and all these ideas that you come up with in your head, you need to be able to discuss with somebody, write down on paper, and then be accountable for achieving those goals or desires or aspirations. And the final, fifth one of change is acknowledgement. So acknowledge the change that you've actually actioned, and take your team on the journey as well, and have some positive reinforcement. But before you can make a plan of where you want your business to go, you must first understand where your business is at now, which is point A, and then point B of where you want to get to. So, for instance, the impact of COVID, or even the current inflationary pressure and high cost of living, and then supply chain issues, means that it's likely that your point A may have got further away. So it may be harder to attain now. So if we use an example of, let's say before COVID, you had an overdraft in your business of $50,000, and your goal of point B was to have $50,000 in your bank account. That would mean you would need, between A and B, you would need $100,000 in your bank to be able to get to point B. And let's just say it was within 12 months that you wanted to achieve that. So now things come along and business gets disrupted, and point A now changes. So what does it look like now? So maybe you had to get an additional $25,000 overdraft. So now your point A is actually $75,000 overdraft. If you're still wanting to get to point B, you need now $125,000 to do so. So that still might be realistic, but it may be more realistic to push out point B from 12 months to, say, 2 years, for instance. So do you know what point A looks like in your business? And do you know where your point B is? And what does the journey to get there look like? So now you know where you are as a result of COVID, and you know what you want to do, and you need to revise your plan. So this could be reviewing your existing business plan, or it could be creating a business plan if you don't have one already, or it could be developing a business recovery plan, especially if you're in the hospitality or tourism industry. If the impact on your business has been minimal, then it's likely that it's just going to be a business plan that you require, or an update to that. But if you've had significant impact, then we'd recommend a business recovery plan. So that will help you revise your personal budget to reduce the pressure on your business's cash flow, and determine whether any additional finance is needed, and revise your business budget and your break-even analysis. You'll also establish your most critical KPIs. So these are your key performance indicators. These will monitor, you'll establish those to monitor the time and identify any opportunities, vulnerabilities, and critical challenges that you have in your business. You'll then identify risks in each department of your business, as well as mitigation strategies. Then you can set annual and 90-day goals to ensure that you achieve that plan in the next 12 months. So let's look at an example of a budget, for instance. So when we have a look at your budget, when we look at it at a high level, we start at the bottom. So we're looking at your net profit. We're trying to ascertain how much do you personally need out of the business to live off. So let's just say, for example, we're going to have a look at the old way and under the new way. So let's say the old way, you needed $150,000 was your target profit for your business to deliver what you wanted. But you've revised your personal budget, and now you're saying, well, we may only need $130,000 to reduce, and that will help to reduce the pressure on your business. If your overheads were over 350,000, but you've been through them with a fine-tooth comb and you're able to reduce them and trim them down to 325,000, that's obviously going to assist significantly. That'll mean that your gross profit, which would have been $500,000, is now $455,000. And let's just say you had a gross profit percentage of 39%. That would mean that you would need sales of $1.16 million. Now, whilst I understand that this is lower than our old target of $1.2 million, it does mean that we need to have a more brutal look at our expenses to ensure our goals are attainable in the current climate. So, of course, you'll need to develop this in more detail, and you then need to break this down into monthly targets and monitor these to make sure that you're on track. So now that you know where you're going and what you want to achieve, it's time to set up your dashboard. So a dashboard, if we use the analogy of a motor vehicle, on your car, it shows you how fast you're going, how much fuel you're using, what the temperature of your engine is. So it will give you an indication of whether you're going to get to your destination or not. It's the same in business. So we want to create a dashboard which will contain KPIs or key performance indicators that you can measure and monitor. So essentially, they're measures which tell you if you're on track to achieving your plan. So your dashboard should show, say, 4 or 5 measures. You don't want to have too many, otherwise you'll become overwhelmed, of measures to improve your business. So if we focus on a small number of KPIs, it allows you to capture, monitor, and report and improve them on a regular basis. Your most important KPIs will depend on the type of business or what industry you'll have, as well as your goals. So let's have a look at a couple of examples. So if we have a look at a manufacturer or a builder, their KPIs might be, say, a gross profit percentage. You might have a look at your cost of rework. So that is, how much does it cost you to go back and fix up the jobs that weren't done correctly? Have a look at your work in progress days. So these are the days, how long is it taking you to build or manufacture that particular product? Because that's costing you. The shorter it is, the better, obviously. And then debtor days, how long is it taking your customers or clients to pay you and get money in the bank? If we looked at a retailer, this could look quite different. So their KPIs might be something like having a look at the sales that go through the till, their gross profit percentage. It could be the average client spend. So when each individual comes in throughout the year, how much on average do they spend? And then the transaction frequency, how frequently are they buying from you? So when you do set goals, you do need someone to hold you accountable for what you've committed to. So have you got someone? So what are the consequences for you if you don't achieve your goals? And have you got a soft coach or have you got a hard coach? Are there penalties for not doing what you said that you would do? So remember the 5 A's of change that we just talked about. So one of them was accountability. So you simply must have someone independent hold you accountable for your actions, and there should be some consequences for inaction. Having your spouse or partner or parent hold you accountable generally doesn't work because they let you off because, oh yes, we know that you've had a hard time, or yes, we know you've been sick, or they always will give you an out, but you need to have someone that is independent. The name of the game in business, in any business, is to optimize workflow, profit, and cash flow. But how do you do this? So let's just summarize what we've talked about. So in your business, if your business is the vehicle that delivers you what you want in life, the top 4 things you need to do to make sure you get to your destination are: you need to set an annual business plan. You need to set an annual budget. You need to set and measure 4 to 5 of your most important KPIs. And you must have someone independent hold you accountable to make sure that you achieve that plan. So before we get started on how to grow your business, it's important that you understand the marketing flywheel, because the marketing is such a critical component of your business to either get new clients in the door or customers, to get brand awareness, or to just even retain the ones that you've got. So let's have a look at this. So that the concept shows you how to attract, engage, and delight customers. So it also demonstrates that you shouldn't just focus on gaining new customers, but that you should also be focusing on delighting your current customers. So firstly, we have strangers. So these are like cold leads. So these are people who haven't heard about your business at all. They know nothing about you. You haven't built up any know, like, or trust factor. And you can do some marketing to introduce your business to these strangers, who will then potentially become prospects. So these are people who are warming up to you, know a little bit more about you, and then they will have the opportunity to buy from you. So when these prospects make a purchase, they become customers. And if we treat them right, these customers will become our promoters or our referrers. The more promoters we have, the more people we have speaking to strangers, to people that we don't know about our business, and then the cycle will continue. So in order to attract prospects to our business, we need to provide value before we extract value. So think about what they'll get for doing business with you and the problems you can solve. So this is really critical, because you are not there to sell to these people. You are there to solve their problems. Think of your marketing as you being a problem solver. Then to convert prospects into customers, we must engage with them and making it as easy as possible for them to buy from us. So our marketing is what attracts and engages prospects and turns them into customers. Then our sales process should ensure customers continue to be engaged and are followed up with really good service. So delighted customers will share their feedback with strangers. It will create more prospects, customers, and promoters. And the level of service we provide determines how we delight and attract current and future customers. So the aim is to keep the marketing flywheel spinning as fast as possible. So we want to be converting more strangers into prospects and prospects into customers, and providing such good service that those customers become our promoters, our referrers of our business. So following this process is essential to growing your business. So now we've got 7 ways to grow our business. So we've got to increase the client or customer retention rate, increase leads, increase prospect conversions. Now I'll go through these in more detail in a minute. Increase transaction value. The 5th one is increase transaction frequency. We're going to look at reducing cost of sales. And the last one is to reduce overheads. So let's delve deeper into each of these 7 ways to grow your business. So the first way to grow your business is to increase customer retention rates. That's what we were talking about before, about keeping your customer and stopping them going to your competitor. So it's much cheaper to make sales to existing customers. In fact, statistics show that it's 6 times easier and cheaper to make sales to existing customers than it is to new customers. So by delighting our customers, we want them to return, therefore increasing our customer retention rate. So are you just having a wee think now about what you do to delight your customers? What you need to do is follow the FGG principle to delight your customers. So that stands for find out what they want, go get it, and give it to them. The second way to grow your business is to generate more leads. So the best way to generate more leads is to delight your customers so they become promoters and provide you with more leads. But you can't rely 100% on just your existing customer base to do all the work for you. So you must attract strangers using your marketing strategies and by providing value. So this could be something like a free download on your website, or it could be a free trial, or even a free consultation. So show them the problems that you'll solve if they engage in your service. They're not interested in you, they're interested in themselves. The third way to grow your business is to increase the conversion rate. So do you measure how successful you are at converting leads, quotes, and proposals into sales? So do you regularly review why you aren't converting more? You should also be monitoring the conversion rate of all your members in your sales team. So if someone's performing better than others, you need to find out why. And maybe that person could give the rest of your sales team some training. And are you using the right people in the sales process? Could be another question. So a key to successfully converting sales is to ensure that you're dealing with the decision maker. So this is one thing that we make sure we do all the time, is when a new potential client comes on board, that we ask, do you need to speak to somebody else about this decision? If they say yes, then you say, great, well, the meeting needs to be with you and that other person. So don't deal with the gatekeepers, get straight to the people who can make this happen. You should also offer a range of options so that the question becomes, which option should I buy, as opposed to, well, should I buy? The fourth way to grow your business is to increase the transaction frequency. So as I said earlier, it's much harder to sell to new customers than it is to sell to existing customers. So it makes sense to encourage those customers to buy from you more often. So you can do this by sending reminders. Maybe you've got a VIP card like at the coffee shop, or offer special deals to existing customers. The fifth way to grow your business is to increase the transaction value. So this doesn't necessarily mean increasing your prices. So think about how you could add more value to your customers. Could you provide them with a range of options? So is it clear what your business offers? Because don't assume that your customers know. You need to tell them. Follow the McDonald's concept of, would you like fries with that? And adapt it to your business. Add on something else to your business. And try not to offer discounts, only to customers that have maybe purchased an add-on. The sixth way to grow your business is to reduce your variable costs. So your variable costs are the costs which increase as your sales increase. So it could be your direct labor, your cost of your materials, it could be sales commission. If you don't sell anything, then the variable costs will be virtually minimal. So implementing better systems to accurately record time and materials used, as well as implementing strategies to reduce rework and wastage, will help reduce your variable costs. So this is a great strategy for builders or manufacturers. One of the biggest problems in business is eroded gross profit. And we're seeing that at the moment with supply chain issues and increase in costs. By reducing your direct costs, this can assist to increase your gross profit percentage and your margins. So remember, the gross profit percentage is the amount that is left over to then pay your overheads. So if you've only got a little bit left over, let's say 8% as a gross profit percentage, that means only 8% of your sales that you've got to pay the rest of your overhead costs. The final way to grow your business is to reduce your overheads. So these are your fixed costs like your phone, your power, your rent, maybe office supplies. A really good practice is to review your overheads on a regular basis. So how often would you review your overheads? It should normally be done annually. However, if you haven't done them as part of your recovery plan, then I suggest that you do so now. Go through your annual financial statements or your zero reports and identify overheads that could potentially be reduced. Subscriptions is a big one that we're seeing with a lot of clients. Everyone now has subscriptions to a whole lot of different apps, and everything seems to be on subscription, even Xero's on subscription. Go through that with a fine-tooth comb, because you could find that there are a whole lot of subscriptions that you're paying for that you don't even use anymore. So you also may be able to negotiate better terms for some of your utilities or your rent, or reduce the amount of office supplies that are being used. And whilst we're on the subject, let's talk about accounting fees. So whilst we're telling you to reduce your costs, if you think that your accountant is a cost, then you need to cut your accountant now. But if you want to work with an accountant as a strategic partner in your business, then you need us more now than ever. So think of us as an investment rather than the cost. So our goal is to save you more in tax or help you grow in the business, way more than any extra amount of accounting fees will cost you. The growth equation is an example that I'd like to go through with you. So this is a calculator that we use to show how small changes can have a significant impact on your profit. So by monitoring your KPIs, you can set goals for improvement. So this calculator shows you the 7 ways your business can grow in action. So for efficiency during this webinar, we've just used screenshots of the calculator, but we can sit down with you and run through your numbers, and we can see the impact of small changes and what that will make and do for your business, and determine goals for determining for improving your KPI or achieve that new profit that you're after. So let's have a look at the current KPIs and profit for this example company. Then I'll show you the impact small changes make on the profit and the value of the business. Now, please note, if you, we've rounded the numbers, so if you're trying to do any of these calculations in your head, they may not quite add up. So let's have a look. So this company has 765 customers with a retention rate of 85%. That gives them an average of 650 retained customers. So 85% of the 765 customers have stayed with them. They received 145 inquiries, and they were able to convert half of those, which gave them a total customer base now of 723. So let's say that each customer makes on average 1.1 transactions a year, and the average transaction value is 1,560. So that results in $1.2 million worth of sales. Now, if we have a look at their cost of goods sold, so this is their variable costs are 70%. So 70% of the sales are costs. And then they've got overhead expenses of $265,000. This leaves them with a net profit of $107,000. And just to demonstrate the value of the business from this net profit, we're going to use a very basic multiplier of 3 times the profit. This isn't actually how we would do it, value the business, but it provides a very rough guide. So the current value of the example business is just over $320,000. So what changes could this business make to improve its profit and therefore its value? The first way to grow your business, as you'll remember, is to increase customer retention rate. So let's say the business implements a customer loyalty program and it creates a Facebook group. This results in an increase of the retention from 85% to 90%. They now retain an additional 39 customers. They receive the same number of inquiries in, but due to what's happening in the market at the moment, the conversion rate drops down to 45%. So this means that they only acquire 65 new customers during the year. So now the total customers are 754. The customer loyalty program means that customers make on average 1.3 transactions. So they've increased the number of transactions each year, and they're spending an extra $40. So sales have now increased to almost 1.568 million. If the business looks at their overheads and negotiates better terms with their suppliers and improves their inventory process, their cost of sales might reduce to 65%. So these changes to the KPIs came about due to some additional coaching with their accountant, and it means that their expenses have increased because there's an additional investment with their accountant there, as well as an increase in, say, some wages. So this now gives a new profit of $248,000, which is an increase of $141,000. if we use that multiple of 3 to get a business valuation, then we're looking at an increase of 425,000 on the valuation of the business. As you can see, the business only had to make some small little tweaks, but they've more than doubled their net profit. So by focusing on delighting your customers, you retain more of them and they're more likely to buy from you more often and spend more when they do buy from you. So remember, this is just an example client. Your numbers will be different, but we can meet up with you, input your numbers into the growth equation calculator to work out what small changes could have on your business. So as Albert Einstein famously said, insanity is doing the same thing over and over again, but expecting different results. We know this is right? So what do we have to do differently this year? So you've got 4 choices. You can do nothing and say, oh, that was a nice webinar. Yes, I know I should probably do some things, but change seems a little bit too hard. Or you could retreat, where you say, well, I might try a couple of things, but have a couple of bad days in business. So you retreat back to doing the same as what you normally did. Or you could take normal amounts of action. I do a few easier things here and there, you get some quick cash flow improvements, but you haven't fundamentally changed your business. So those quick wins evaporate along with the quick cash. Or you could take massive amounts of action where you say, I want to fundamentally change my business because it's here to serve me and not the other way around. So as the old saying goes, if you've done what you've always done, or if you do what you've always done, you'll always get what you've always got. So you know that's not possible in the current environment, right? So if you do what you've always done, you're actually going to get less than what you used to get. So you need to bridge the gap. Okay, so I just want to remind you all that this webinar is an educational webinar in nature, and it's no substitute for specific or tailored advice and support. Please do reach out to your accountant or to us so we can give you more specific information about your circumstances. But there are several ways that we can help you more specifically beyond today's webinar. So firstly, if you don't have one already, we can help you with an annual business plan. So we can help you develop yours over a half-day session. You'll walk away with a 1-page business plan. A lot of business plans are 20-odd pages long. We reduce it down just to 1. We have a look at, we review and set your business direction. We have a look at some of your values, your mission. We have a look at your budgeted figures at that high level. We look at your profit, looking from the bottom, working back up to what your sales need to be, putting some goals in place and some timeframes around those, which would then lead to the next thing, which is a cash flow forecast and budget. So that is taking the figures that we came up with in your business plan, looking at that at a micro level, and looking at every individual line on your your sales and your expenses, working out how much profit we think you're going to make from that, and then also looking at how you're going to finance that. So it's all very well to maybe increase your production, but how do you finance that? Do you need bank funding, or have you got finance elsewhere that you can, maybe private finance that you can rely on, or equity? Once you have that forecast and budget, that can then be added into Xero, and then you can prepare a set of monthly management accounts. You compare your actual performance against your budgeted performance and have a look at any variances that may occur. Then you can have a look at your the quarterly coaching, or you can do it on a more regular basis, monthly or bi-monthly, and that'll give you some direction in terms of where you're going with your budget and your plan, and are you on target to achieve those goals. We're also offering all attendees a complimentary copy of our ultimate guide to key financial levers in the business. So this guide goes into more detail of the 7 key steps to grow your business, as well as looking at 7 key areas to increase the cash flow in your business. Additionally, we're also offering all attendees the opportunity to complete how to grow your business or growing your business in the current market action list. So this allows you to identify the actions you can take to grow your business. And then we'll have a 15-minute complimentary call with you. We will review your completed action list and ensure you've identified all the actions relevant to your business and that you have a plan to implement these changes. And finally, we have a complimentary meeting. Whether you're a client or not a client, we are offering a 1-hour free consultation where if you're a new client, we can go through what your goals, what you're trying to achieve and see whether we would be the right fit for you. Or equally, if you are a client, then there's a complimentary meeting to have a look at your goals in a little bit more detail if you're not already doing the business plans. We could be looking at some financial literacy, or there could be other things that come out from that. So now we're at the question end of the webinar. So Amy, have we got any questions there?
Yes, we do. Thank you for that. It was really beneficial. We've got a question here. Can you explain the differences between variable costs and fixed costs?
Yeah, sure. Okay. So the variable costs are the variable costs change as your sales change. So the more you manufacture, the more you buy, the more stock, for instance, you're getting, then those costs are going to increase. So that's your variable cost. The overhead costs are your fixed costs. So they remain the same, regardless of whether you get up in the morning and manufacture anything, regardless of whether you turn up to the building site, regardless of whether you turn up to the retail store. You've still got power to pay for. There's probably wages, admin wages that you've got to pay for. There's rent you've still got to pay for, telephone and tolls. So that's the difference between the two.
Great. Thank you. We have another one here. What are some other ideas we could use to get more leads?
Okay, leads. So you could do, there are standard things like having, your business cards, marketing material. You could have some promotional material. You could do maybe some kind of profile about yourself. Obviously, having a website is beneficial. You could host a fundraiser. You could have the VIP cards. You could hold a special evening just for those existing clients that maybe it could be drinks, or you could hold a fundraising event.
Great. I've got one last one here. I'm a builder. What should my gross percentage be that I aim for? Okay, so that's slightly outside of the scope of this webinar, but for a builder, so each industry is different, and a builder, the gross profit percentage, you should be aiming for around 20 to 25%. So that means of the sales you're making, 20% of that needs to be left over, so then you can pay at a minimum, so then you can pay your overheads. That means your variable costs should not be any more than 80%. So if they are more than that, then you need to be having a look at, how long is it taking you to complete a project as a builder, or if you're a manufacturer, how long is it taking to complete to build a widget, to manufacture a widget, and if you need to monitor your labor costs, so have some type of app like Workflow Max, for instance, that keeps track of your time, and have a look at rework. Are you going back and having to spend a whole lot of time fixing up mistakes or errors or anything along those lines? So maybe some training's involved. Great. Well, that was the last of those questions. I'll leave it for you now to sign off. Thank you.
Okay, great. Thank you. So do we have any more questions? No. Hold on. I think there's one more.
Oh.
Have you got that, Amy?
No, I haven't. Have I?
Okay.
Oh, yes, I do. I do. Oh, hold up. Yes. Okay. What is your opinion on what the economy is going to do between now and the end of the financial year?
Yes, that's a very interesting question, isn't it? What it's going to do. Well, interest rates were meant to skyrocket. I think they've got probably potentially as high as they might go. We are seeing things starting to flatten out a little bit now. As much as they're talking about the R word, recession. Once again, this is outside the scope of the webinar, but will it occur? You know, they've mentioned it so many times, and the economists can't seem to get it right yet either. So it'll be interesting to see how it goes. But I do think you do need to be thinking seriously about your overheads. You need to be thinking seriously about your variable costs and supply chain issues, because I do think you may need to hunker down a little bit in terms of your spending and having a look at what comes out at for your net profit position.
Cool. That was a great question. Thank you. That is all I've got. Have you got any more on your end?
No, I think that is
That's a wrap.
Yeah.
Okay, I'll sign off.
So just before we go, I thought I'd share this quote with you. And this tongue ties me every time, this quote. So, success is neither magical nor mysterious. Success is the natural consequence of consistently applying basic fundamentals. So from today, make a simple plan. Commit to at least 3 actions that you'll take as a result of today's webinar. Write them down. Give each of them an owner, so whether it's you do it or you delegate it out for somebody else to do, and put a completion date with it as well. And remember, if you need our support, we're here and we'll help you. Thank you, everyone, for making the time to attend this webinar. We appreciate that your time is very valuable, but I do hope that you've taken at least one point from today that you can walk away with. What we do ask, please, is that at the end of this webinar, there will be an exit survey, and we would really appreciate if you would complete that. It will then allow us to continuously improve and get your feedback on what other webinar topics you might be interested in, and we'll be able to review those. You'll also be able to tick any of the boxes in terms of if you want any of that complimentary extra service that we can offer you as part of being an attendee in the webinar today. So we hope we've given you plenty of ideas to ponder and some clear next steps for you and your business. We have finished early, so we are giving you back some time. Thank you so much for attending, and if you need us, just sing out, but please do complete the exit survey. Thanks, everyone.